Mic check, mic check, mic check, mic check. Mic check, mic check, mic check. Mic check, mic check, there we go. Check. There we go. Check. Good evening, everybody. Hope you guys are doing great. Beautiful, beautiful, beautiful Monday. Beautiful, beautiful day today. Let's wait in for more people to come in. Thank you guys for coming in. All of you that are not late. It's a beautiful day today. It's a beautiful Monday. Alrighty. Let's wait for more people to come in. Let's give them a few more seconds. Shout out to everybody that's here early. I greet you guys. Greetings all the way from South Africa, Johannesburg. I hope you guys are doing great. I hope you guys had a lovely day. I hope you guys had a profitable day. Yeah, man. Let's get right to it. Welcome to yet another webinar live trading session with me, Isaac Izy, courtesy of Octa, all made possible by Octa. If you haven't registered with Octa, please make sure that you do register with Octa Broker. Great platform, man. Great platform. Smooth platform. Smooth execution. No swaps. Tight spreads. So yeah, man. Shout out to Octa. Shout out to Octa for giving us smooth trading conditions. Indeed, it's making trading clear. Trading made clear, courtesy of Octa. All right. As people are coming in, please let me know where you're tuning in from. Let me know where you are tuning in from. Let me know which country you're tuning in from. Let me just quickly save this work of my computer just in case I get Right. Tell me where you're tuning in from. We got Yogesh all the way from India. Shout out, Yogesh. Please tell me where you guys are tuning in from. Buy or sell what? Already. Quick. Relax, man. Patience, man. Patience. No rush. We have Lizzie all the way from South Africa. Where in South Africa are you tuning in from? Where in SA are you tuning in from? Buy sell what? No. We don't work like that here. Please. We are here to give you knowledge. And then we'll get to the charts. All right, relax. All right, I see people are not coming in. Wait, what's going on? Oh, okay. My bad. It was my phone taking time to load. All right, great. Welcome, guys. Good evening. Welcome to yet another live trading session with myself, Isaac Izy. Before we begin, I just want to put out a disclaimer out there that any opinion news research, prices, analysis, or any other information discussed in this webinar or linked to this presentation is provided as general market commentary and does not constitute as investment advice. All right? As investment advice. If you ever need any investment advice, please make sure that you speak to a you speak to a regulated entity or a regulated key individual, all right, and make sure that they are regulated by the regulatory board, the finance regulatory board in your country. In South Africa, we are regulated by the FSCA, the Financial Services Conduct Authority. Make sure that whoever that you're speaking to, you're seeking financial advice for or investment advice from, is a person that is regulated by that entity. All right. Tell some important codes, best medicine for trading, from South Africa, Mbombela, all the way from Nelspruit to Mbombela. Shout out to Pumalanga. Shout out. Please let me know where you are tuning in from. Please let me know. So you first tell me your name, the country that you are from, the city that you are from, and whether you are a beginner or you are an advanced trader. So where you are from, your name, the country, the city, and whether you're a beginner trader or an advanced trader. All right. Please do give me that in the comment section. As we proceed, before I even get to this, can I just ask, guys, can we be a little bit more engaging? Can we engage? Can we talk with each other? Let's comment so I know that you guys are understanding what I'm saying. Let me, so when I ask you, like for instance, give me fire emojis if you understand, or give me dollar emojis, dollar icons, or whatever. Please just make sure that you communicate with me so we have a little bit of fun, because I'm here to give you knowledge and I just want to make sure that you are understanding what I'm giving you. So I have been promising you guys that I'm going to give you a little bit more of advanced information, because we've been doing a little bit of more basic information, as well as my, the secret sauce to my strategy, the key levels. So if you're joining us for the first time, please do refer to my previous videos, as I do explain more about my strategy. But if you have been joining me, so make sure that you stay tuned. I'm going to be talking about quite a lot of things that I haven't discussed before in any of our sessions. So stay tuned for that. Stay tuned for that. I see we have a lot of India here. We have Michael all the way from Nigeria, Imo State. We have Olawale all the way from Nigeria as well. Beautiful. I love you, bro. I love you too, man. We have a beginner all the way from India. Shout out. All right, guys. Please make sure that you stay tuned. At the end of this video, I'm gonna give you guys 100% bonus code. All right, after attending the lesson, you're gonna get a promo code for 100% bonus to double your deposit and maximize your profit potential. I will share the promo code at the end of each session, so please make sure that you stay tuned for that. Do not leave until we are done with the session. Today we're gonna be sharing quite a lot. All right, we have Aman Ali. Great, shout out. For those of you that are joining me for the first time, are there any first timers here joining us for the first time? Please let me know. If you are joining us for the first time, please do let me know. All right, for those of you that do not know me, my name is Isaac Izy. I'm a professional Forex trader with just over a decade of experience. I'm a founder of Flexi Forex Trading College, and we have trained over 5,000 students over the years. And we have held over 300 Forex seminars throughout the Southern African region. And our passion is to provide new traders with proven strategies and empower them to succeed. That is our passion, that is our mission, that is our vision, that is our goal. So empower new traders with proven strategies and make sure that they they succeed, they increase their chances of succeeding. That's what we do. All right. Hi, sir, joining for the first time, Lizzie. We have Michael joining for the first time. Great. Looking forward to having you guys. Hopefully, this is not your last time. For everybody that's joining us again, not for the first time, I thank you for coming back again. It means you are having a great time with me, as I am having a great time with you. So please join me every Monday, 7 p.m. Central African time. Do let me know what's your local time where you are right now. In South Africa, it is 11 minutes past 7 p.m. All right, so please make sure that you join me every Monday, 7 p.m. Central African time or South African time. I don't know what time it is in your city or in your country, but please make sure that you join me every Monday for a webinar. All right, so today we're going to be discussing price cycle. I'm going to give you guys a little bit of feedback so you guys can understand how the market moves. All right, and then I'm going to show you guys again how to incorporate price cycle together with the key levels that I've been teaching you guys. All right, so we're going to discuss consolidation phase, we're going to discuss expansion phase, we're going to discuss the pullback or the retracement phase, we're going to discuss a reversal phase, we're going to do price cycle with key levels, and from there we are going to go into the charts. We're going to look at opportunities. We're going to discuss that which we have been discussing here, so we can put it into practice, so I can show you guys how to look out. And then if there is any opportunities, we're going to take opportunities. You guys can tell me which currency pairs you want me to look at. I know a lot of people that come in here like looking at gold. You know, we're going to look at gold. We're going to look at NASDAQ. We're going to look at the Dow Jones. We'll look at a few currency pairs as well. How to join trading classes. Please make sure that you join our Telegram channel, the South African Telegram channel. You'll get all the information there. You can follow me on Instagram at Isaac Izy, at Isaac underscore it's easy, right? At Isaac underscore it's underscore easy. You can follow me there and you can join our Telegram channel. I believe we will put the Telegram channel here in the comment section. So yes, let's get right straight into it. All right, now let's discuss price cycle. All right, I say here price generally moves in 4 cycles. Now it's important for you to note that whenever price it moves, whenever the market moves, generally moves, not even market moves in 4 cycles. There's 4 cycles. There's the consolidation phase, right? There's the expansion phase, or what other people will call the impulsive phase, all right? An impulsive move. There's the retracement phase, and there is a reversal phase. These are the 4 cycles that the price moves in. If you're trading stocks, you'll understand that we have the accumulation, we have the markup, we have the distribution, and then we have the markdown. All right, but if we are talking general in Forex trading, generally we look at the consolidation phase, we look at the expansion phase, and we look at the retracement phase, and generally the reversal phase. All right, so it's important that you keep in mind these concepts. All right, so next time when you're looking at the chart, you see, okay, there's a consolidation phase. It means after a consolidation phase, there's going to be an expansion phase or an impulsive phase. After the expansion of the market, then the market is going to retrace or it's going to pull back, and after the pullback, we're going to have the reversal where the market continues in the intended direction. So far, do you guys understand what I'm saying? We have 4 cycles in the market, so whenever the market moves, it will move in 4 cycles. You will have either the consolidation, you'll have the expansion, you'll have the retracement, or the pullback. You'll have the reversal phase as well. All right, and as I said, whenever there's a consolidation, after a consolidation, what will follow is the expansion. All right, so whenever the market consolidates, there will be an expansion after an impulse. After an impulse, you have to expect a retracement or a pullback, and after a pullback, then there will be a reversal or the continuation of the trend. All right, let's get right into it. Consolidation phase. What is the consolidation phase? All right, so whenever price is ranging between 2 prices, all right, when the market is moving sideways, all right, it's neither an uptrend, or a downtrend. The market is just moving sideways. It's not going up, it's not going down, it's just sideways, just moving in between two prices. All right. There's an indecision in the market. There's an indecision between the bulls and the bears. All right. They're still deciding which direction to take. The market is locked up, or there is not a lot of volatility in the market, or there isn't a lot of activity in the market. The market, like today, if you noticed, the US 30. Let's just quickly see if we can open. Let's quickly go to US 30 market. As you can see, what the market is doing from here up until there, the market has just been moving between these two, high and low. The market is consolidated. All right. So after consolidation like this, what we want to see is we want to see an impulse. The market is either going to break up to the upside or break down to the downside and give us or give us a what do you call, or give us a to the downside or upside and give us an expansion phase. Are we together? All right. Are you guys with me? Are you guys with me? Are you guys with me? Please comment in the comment section if you are with me. Let me know if you understand what we're talking about when we're talking about consolidation. Consolidation phase is basically where the market is just moving up and down. You see, the market is not trending up, it's not trending down. All right. If you don't understand trends, all right, if you don't understand trends, please make sure that you watch some of my previous videos where I have given you guys a breakdown of what makes a trend, what makes an uptrend, what makes a downtrend. All right. So in a consolidation phase, the market is neither moving up or down, it's moving sideways. It's locked up between two prices. There's an indecision. So what we expect after this phase is the expansion, either the market breaking to the upside or the market breaking to the downside. You guys with me? All right. For those of you that are asking for my Instagram handle, it is in the comment section there. Isaac It's Easy. Please make sure that you do follow me. Make sure that you join our Telegram channel, the Octa Telegram channel. We send out signals. We send out free educational content. We do trading psychology. All right. All right. Great. Let's move on. Let's move on back to our presentation. All right. So as I said, price is moving sideways. The market is neither bullish nor bearish. There's an indecision between the bulls and the bears. And that's what we call our consolidation phase. Basically, the market is just moving sideways. Market is not going up. It's not going down. It's just moving sideways. All right. Whenever you see that happening, what you should expect next is the expansion phase. All right. The expansion phase is when price moves quickly from a level of equilibrium, when price breaks out of a consolidation. All right. So whenever the market breaks out of a consolidation, there will be an impulse. There will be what you call an impulsive move or an expansion move, where the market either, again, as I said, it breaks to the upside or it breaks to the downside, and it gives us an impulsive move. Right, so here I say equilibrium is 50% or the midpoint of the high and low of the consolidation area. Let's quickly go back to our chart. As you can see, this is our high, this is our low. Our equilibrium will basically be around that price over there, the midpoint of this whole consolidation area. All right, it will actually be around that price over there. All right, it will be around that price over there. All right, that will be the midpoint. All right. Are you with me? So as I said, whenever the market breaks out of a consolidation, we're going to have an impulse move. We're going to have an expansion. And then expansion is when price moves quickly from a level of equilibrium, when price breaks out of the consolidation. All right. And this usually happens on or near a key level. If you understand key levels, we have discussed it before. Key levels, and you can see around here, the market is consolidating between two of my key levels, 34150 and 34050. Those are my key levels. Those are my 50 levels, and the market is consolidating between those. And as I said, a breakout of this consolidation will happen near those. If you have attended any of my sessions, you know this is where we want to take our entries. You know this is where we want to take our entries. So should the market break to the downside, we have to expect the market to come back to this area so we can take our entry over there. So we're waiting for an expansion to happen. All right. And as I said, this will happen near or on the key level. All right. You wanted the market to break out of a consolidation, but it's also happening at a key level. All right. Because that's where we take our entries for the sake of my strategy. All right. Let's move on. Do you guys understand what an expansion is or an impulse is? All right. Sorry, bro, is that smart money concept or price action market structure? Is market structure, bro. All of these names that people are making up, it's just people just trying to sound smart and all of that. Market structure is market structure, bro. All right, I'm not an SMC trader. I'm not a price action trader. I'm a trader. All right. I'm Agent 45. Okay, let's move on to retracement phase. Retracement phase. What is a retracement phase? Retracement phase or a pullback phase is when price pulls back inside the recently created price range. All right. What is a price range? Price range is the expansion out of the area of consolidation. So whenever there's a consolidation, let's just quickly go maybe to the charts and see, okay, there we go. There's a bit of a consolidation over here, right? There's a bit of a consolidation over there. Market breaks out, all right? This is now what we call market range, all right? Price range, all right? Expansion out of the area of consolidation is when the price pulls back inside the recently created price range, and our price range will be the expansion out of, although this is not a very good example, but I just wanted to show you that's what we refer to as the price range. It's basically after the consolidation, there's the expansion. That expansion is what we call the price range, and the retracement is when the market goes to the opposite side to fill back the inefficiency of, all right, of that price range. All right, that's when we say price pulls back to fill any inefficiency to allow both buyers and sellers for fair opportunity to liquidate the market. All right, and after the pullback, market continues in the intended direction. So the retracement is the market breaks out of a consolidation. We have an expansion that the market pulls back to give us entries. All right. We remember, again, if you've watched my videos on key levels, when I explain key levels, you will know that we take our entries after the retest or after the pullback, after the market has told us which direction that we are going into, and we take our prices where at the key levels. All right. So we wait for a retracement to get to our key levels or a pullback. That is the third phase of the market. So that's what will happen after the market has expanded. All right. Are you together? Are we together? Can you guys confirm in the comment section if you are with me so far? You understand? Please let me know if you do understand in the comment section. Can I get some fire emojis? Can I get some fire emojis? Can I get some fire emojis? Fire emojis in the comment section if you are with me. All right, let's move on. Let's move on. And then we have the last phase, which is what I refer to as the reversal phase. Reversal phase. So when price moves in the opposite direction from what current market direction was moving in. All right. So it's either from a downtrend to an uptrend or an uptrend to a downtrend. All right. The aim for the reversal is to seek for any liquidity and to is to seek for any liquidity and to take them out. All right. Is to seek for any liquidity and to take them out. So liquidity, that's what a lot of people will refer to as stop hunts. That's what a lot of people will refer to as manipulation. Whatever you want to call it, be it manipulation, be it stop hunt, whatever you want to call it whatever, man. The bottom line is you understand what it is, all right? So, as I said, we have trend line liquidity, we have equal lows and equal highs, all right? You guys understand that? So reversal, again, we have a consolidation. We break out of a consolidation. The market gives us an expansion. After the expansion, we have a retracement. Market going back to near where the breakout was, where the market broke out of the consolidation, near or at a key level, where the market pushes back to a key level. After that, the market is going to reverse and go to the intended the intended direction of the market. All right, are we together? Do you guys understand the reversal part, the reversal phase? We've discussed reversal patterns before. Just trying to see if I can find something real quick that indicates a proper. All right, yes, here's a clear indication of what I'm talking about. We had a consolidation, we had an expansion move. All right, we had an expansion, we had the market coming back. This is a retracement. Let me just quickly name it. We have an expansion, right? We have an expansion there, and then we have our pullback or retracement over there. And then we have, that's our pullback, and then we have our reversal over here. All right, and then obviously we have our consolidation over here. Consolidation. All right, fire emojis in the comment section if you see what I'm talking about. All right, so we have the four phases here. We have a consolidation happening over there, the market, and then there's a high, there's a low. All right, that's our equilibrium over there, and you can see the equilibrium is at our key level at triple zeros, which is now our 33,000. You see exactly what happened. The market pushed, there was an impulsive move to the upside. All right, that's expansion. We had our expansion, and after our expansion, we had our pullback. All right, market pulled back again near our key level 33,100. That's our double zeros, and then we had the reversal to the upside. The market continued going all the way up. Do you guys understand? Can I get some fire emojis if you understand? Do you see exactly what happens? This is again in confluence with the key levels. All right, we had a consolidation, we had our equilibrium, the 50%, which is the midpoint of the consolidation. It was at our key level. Market broke out of it, of the consolidation. We had our expansion. We don't enter there. We wait for market. Market came and played around the 30, our double zeros. Market came in, and then it reversed from there all the way to the upside. Does it make sense? Does it make sense? Can somebody tell me if it makes sense? Can somebody confirm in the comment section if you guys understand how this works? Let's see if we can find another example. See if we can find another example. Okay. I'm just gonna use this small consolidation over here. We have a consolidation over here. All right. Consolidation, price moving between two prices. Our midpoint 32,850, which is our key level as well. 50, the midpoint. You guys see that, right? Then we had what? Okay, that was our consolidation. This was our expansion. We had a pullback, and then we had a reversal, and the market shot all the way down. Do you see that? Where was your entry? Your entry was going to be here, where at the breakout of your consolidation, the market reversed to that 32,800. That's our key level. We said we want to enter at the key levels, our double zeros. The market came to that price and then shot all the way down. You took your sell entries over there. Your take profits would have been at 700. Your take profit 1, take profit 2 at 600, take profit 3 at 32,500. All right, you see that you would have banked at least 100, 200, 300 pips on that particular trade. All right, with the 0.01, with the 0.01, I don't know how much was that gonna be. I don't know. Quite good monies. Quite good monies. All right. So, do you have any? Do you understand what we? Before we move on, do we understand what we mean by the consolidation phase, the expansion, the pullback, and the reversal? Please give me fire emojis. There's only about 2 or 3 people commenting. All right. We have about 30 people here, guys. Can we engage? Can we talk? So I know that you understand me. So I know that you understand me. So we can move on. All right. Let's move on. Let's move on. Let's move on. All right. Oh, that's wrong. All right. So as I said, the reversal phase is when price moves in the opposite direction from what the current market direction was moving in. All right. The aim of the reversal is to seek for any liquidity and to take them out. Liquidities as trendline liquidity, equal highs, equal lows. Those we will get into them as time goes by. Probably in our next session, I'll dive more into understanding liquidity. I'll dive more into understanding manipulation, stop hands, or whatever you guys call them, or fake outs or fake breakouts as you guys call them. All right. Let's move on. Let's move on. Let's move on. All right. So again, this is an example of what I just showed you. We have a consolidation phase. Then there was a break of structure over there. The market went all the way to the downside with the expansion phase. Market is now retracing all the way. We're looking for entries at around that price there to the downside. Depending on what happens there, you need to use this in confluence again with candlestick patterns. You want what do you call? You want to use this with what do you call? Candlestick reversal patterns and all of those things that we've taught before. Single candlesticks, you want to look at dual candlesticks, you want to look at triple candlestick patterns, or you want to look at your double tops, your double bottoms, you want to look at your head and shoulders or inverse head and shoulders, you want to look at triangles, rectangles, whatever price pattern that will happen in that price range. That's what you want to look at. All right, are you with me? Live session is very useful. Thank you so much. I appreciate it, Ahmed. I really appreciate you saying that. All right, as I said, we have our consolidation over there. We have equilibrium, which is the midpoint. Again, you see it's at 91750, which is again our key level. Based on our key levels, we have the consolidation breaking out of this key level 91500. It's our double zeros. The market went all the way down, broke structure to let us know that the sellers have kicked in there. So that's why we broke the previous low over there. And then we are now retracing. We're retracing back to around that area over there. And we're going to go all the way down. All right. Is you guys with me? Is you guys with me? You guys, that's another example that we looked at. All right. That's GPB AUD. We're gonna let's actually just actually check on the charts. Where is it? Let's see the charts. I had opened it earlier on just to see. So the market is still playing around. So as I was preparing for this is what the market has been doing. So we're looking for, let's see where the market reverse, see if it's another let's look at 900. You see? No. 90. That's 900. You see, the market reversed at a key level. All right. It didn't get to our main key level over there, and then it turned all the way down, which is why it's important for you to look at these key levels. I'm sure if you can go back into history, we'll see why that happened. There we go. No, it's not that one. We can see this is a very strong key level. You guys see that? It's a very strong key level. So again, remember, history repeats itself. That's 90900. All right. History repeats itself. We see the market reversing whenever it gets to this price, which explains why now at 90900 we had that reversal going to the downside. All right, let's see how many pips to the downside. It's about 45 pips to the downside. That was a nice trade over there. That was a nice trade. Unfortunately, I missed that one. We can have a look. I was hoping we can get to look at this by the time we get to this session, but there's always more opportunities. This is my first time joining a live trading session. I hope it will help a lot. Please do refer to any of our previous materials. Please make sure that you pay attention as we're about to dive more into today's session. All right, and I do hope that it will help you. All right. So you guys understand the phases of the market. We said we have the consolidation phase, we have the expansion phase, we have the retracement phase, we also have the reversal phase. It's important to understand that after a consolidation phase, the market is going to break out of the consolidation and expand. All right, that's why it's called the expansion phase. The market is going to give us an expansion phase. You don't want to just jump in immediately, all right, if you're a patient trader, but if you're not, you can jump on and make sure that you use tight stop losses, all right. And then after the expansion, we're going to have a retracement. After the retracement, we're going to have a reversal to the intended direction of the market, all right. So that was just a recap. So now how do we use that, understanding that, how do we use it with the key levels? What are round numbers? Key levels, all right. So these levels are of particular interest because especially the biggest traders tend to place their orders near them, all right. So as I always explain, trading is a business, right? So in any business, that's why it's called the market. The market is where buyers and sellers meet. So I just want you to understand the psychology behind this. It's where buyers and sellers meet, right? So wherever buyers and sellers meet, it means there are people that are selling, there are people that are buying. And if there are people that are selling and there are people that are buying, it means there's something that we all look at. The seller is looking at the price that I'm selling at, and the buyer is always looking at the price that I'm buying at, right? Are you with me? Can I see some fire emojis if you are with me? All right. We understand that the market is a place where buyers and sellers meet. It's a business. And whenever there's buyers and sellers, it means there is a price, all right? Price is, as a seller, this is how much I'm selling this commodity at. As buyers, this is how much I'm buying this commodity at, all right? We understand that, all right? So even in Forex trading or in the Forex market, there is price, all right? Let's just quickly go to the chart. As we look over to the right-hand side, to the far right of the chart, we see what? Price. We see numbers. Those numbers are price. This indicates that, as you can see, that the market is right now, the price of this particular currency pair is 1.90472, right? As a buyer or as a seller in the market, this is what I want to look at. How much am I buying at? How much am I selling at? All right. As we can see, the sellers, they sold the market at 90900, and then if there were buyers, they had bought the at 89,000, 1.89. You see, again, those are triple zeros. See exactly where the market reversed, right? Exactly where the market reversed, man. I love this. This is so beautiful, man. And I love it that it just always stays near me. All right? All right. Can I see some fire emojis if you guys are with me? Some dollar emojis if you guys are with me. All right. We see that the market did what? The buyers bought at 1.89000. The seller sold at 90,000. So what does that tell you? Right? Let's go back to, nope. Let's go back to our presentation. So the psychology behind this is that these are psychological levels, all right? It's what we call the round number bias, right? Think about it. How many times do you see something selling for 97 Rand per 99 and you say it's 900? Typically, people will usually round off to the nearest 100, the nearest 50, or the nearest 1,000, or the nearest tens. All right. Remember when you're still in primary school, when your maths teacher taught you about the nearest 10, rounding off to the nearest 10, to the nearest 50, the nearest 100, or the nearest 1,000. This is what the round number or the double zeros and triple zero or the key levels, this is what we refer to, all right? So the example of double zeros, if you look at the NASDAQ, we look at 11,200 price, 11,300, 11,400, 11,500, and so forth. And if you're looking at the Dow Jones, we look at 34,700, 34,600, 34,500, 34,400, 34,300, and so forth, all right? And if you're looking at currency pairs like the Euro USD, we look at 1.1400, we look at 1.1500, 1.1500, 1.1600, and so forth. If you're looking at USD JPY, we look at 104.00, we look at 1.300, 1.200, and so forth. And if you look at triple zeros, we look at 12,000, 13,000, 14,000, 15,000. On NASDAQ, on Dow Jones, we can look at 33,000, 34,000, 35,000. Euro USD, we look at 1.2 thousand, 1.3 thousand, and so forth. And as I said, some traders will look at the midpoints between the RB numbers known as the 50s. We have the 50s, we have the 10s. So whenever the market gets to this price, there's bound to be reaction from the market makers. There's bound to be reaction from the sellers or the buyers. As I said, it's either we are buying at 11,200 or we are selling, right? So the people that move the market, all right, they will decide that we are going to buy NASDAQ at 11,200. They're not going to look at the 234 and whatnot. They usually want to round off the price because that's how much they are spending. So what we do is we also want to take our orders in that particular on that particular price. Does it make sense? Can you guys let me know if it makes sense so far? All right. Please let me know, comment section. Give me some fire emojis. Give me some dollar emojis. Give me some fire emojis. All right. Price will tend to here are some concepts to help you understand better. All right. Price will tend to reverse near RB numbers. Price tend to reverse near RB numbers. All right. Or the round numbers or the key levels, whatever you want to call them. Not every RB number will cause a reversal. It's important to know that, right? And price swings will generally run 3 to 4 RB numbers. That's between 300, 400 pips in a trend. And price swings will generally go 1 to 2 RB numbers in a correction, or that's what we call a pullback. So an expansion will take about 3 or 400 pips, or 3 or 4 RB numbers. And then a correction will usually go about 1 to 2 RB numbers. All right. Correct. Let's move on. All right. You can use them. You can use the RB numbers as your support and resistance. I keep forgetting that my camera is not there. Camera is here. My apologies. All right. So as I said, you can use these RB numbers as your support and resistance. Let's quickly go into the charts. All right. Let's quickly go into the chart so you can see that's basically my support over there. That's basically my resistance. That's my resistance, right? Even if we go all the way up there, I'm sure we can find our key level, 400. Look at that, 93400, exactly where the market reversed. Isn't that your resistance level? That's your resistance level. Exactly where the market reversed. What happened? The sellers took price there. Isn't that beautiful? Let's look at that one there. Let's look at that. Our nearest is 200. Over there. Look at that. Exactly where the market reversed. Do you guys see that? We can have a look at that one over there. We can look at that. And then our nearest to 727, go 700. Look at that. Isn't that beautiful? Isn't that beautiful? Look at that. Look at that. Look at that. This can act as your support and resistance. Let's look at that price over there. And 300. Bingo. You guys see that? Do you guys see that? Are you guys with me? And I feel like I'm talking alone. Can you guys hear me? Can you guys talk to me? Please make sure that you speak to me so I understand that we are still on the same page. Hmm? Oh man. Like people are not talking. I don't know if you guys can see me, if you guys can hear me. Am I visible? Am I audible? Or I don't have network? Hmm? Don't I have what's going on? Can I get some conversations? Can I have conversations? Can I have people talking to me? Can I have some comments? Let me know if you can hear me. Let me know if you can see me. Please let me know that you are still with me. But please make sure that you're writing up a little bit big so that we can see. Oh, okay, okay, now 100%. All right. All right, let's move on to. So you guys understand, as I said, we can use this as your support and resistance. We've just proved it now. All right. So how do you use RB numbers? As I said, what is the direction of the trend? All right. You can use your smart money concept or price action, your preferred technical analysis to determine the trend. Only trade with the trend. All right. Number two is you wait for the price to swing in the direction of the trend. That is what we call the expansion. All right. And then you wait for a correction to begin after a high in an uptrend or a low in a downtrend near an RB number. That is what we call the retracement, all right? And then you take your entries at the retest of your RB number in the direction of your trend. Again, that's where the reversal phase come in, and then you go all the way in. Set your stop loss near at the next round number at your 50 level, depending on your risk to reward ratio, all right? And then you can set your take profits between 200 or 300 pips from your entry price. Does that make sense? All right. Does it make sense? So, like I said, step one is you need to determine the direction of the trend. What trend are you in? Are you in an uptrend or are you in a downtrend? Number two is you wait for price to swing in the direction of the trend. So you wait for the expansion phase to happen. All right. After the expansion phase, what do? You wait for the correction, which is now your retracement or your pullback phase. You wait for the correction to begin. All right. And then after the what you call the correction has been done, you look at your key levels, and that's where you take your entries at your key levels. That's the reversal phase. You want to take the reversal phase, right? So at the beginning of the reversal phase, that's where you want to take your entries. All right, let's quickly look at the charts. All right, so let me just say, when price expands and creates inefficiency, price action, plot your nearest key levels, your 50s, your 100s, or your thousands near the breakout of the area of consolidation. So for instance, we have a consolidation over here. My key levels are already plotted. So I'm waiting for a breakout of that. All right. You want to make sure that your key levels are plotted over there. All right. And then after that, you wait for a retracement near your key levels. So if again the market breaks to the downside, we want to wait for a retracement till around this level or that level over there. If the market breaks to the upside, we want to look at market retracing back to about 34,200. All right, 34,200 or the 34,150 price. We want to look for a retracement to the around that area. All right, and then if the market breaks to the upside, this is what we want to see. We either want to see that happening. All right, we want to see that happening, or we want to see this happening. All right, that's what we want to see happen. So we're going to take our entries between these two prices, either here or there, depending on what the market is going to give us. If the market rejects here, again, that's what I said, you need to use candlestick patterns and other confirmations. The market rejects here, we're going all the way up. If the market comes down, it's going to come and test that area there, and we're going all the way up. If the market breaks to the downside, this is what we want to see. All right, we want to see that happening. Come back over there and go all the way down. Or we want to see market coming to test this price. My nearest key level will be that price over there, and market coming all the way to that price. Again, we said we want to take our entry and we count 200 to 300 pips, so 100. So from there, our entry 100, 200, 300. This is where our take profit would be at the 33,700. All right. And then, yes, if we coming from here, we want to 34,300. We want to look at 34,500. That's about 300 pips in the direction to the upside, 300 pips to the downside. And you want to put your stop losses just above. If you're taking your entry here, you want to put your stop losses just above 34,100, depending on your risk to reward ratio. If you're taking it here, you want to put it just above the 34,050. Does that make sense? So that's what we're currently looking at. How do you find the pipes? What pipes? What pipes? What pipes? And then let's look at Nasdaq. Nasdaq, we're currently in a consolidation phase as well. Let's look at a 15-minute chart. We're currently in a consolidation phase. So market has been playing around these two prices over there between 15,200 and 15,100. All right. So again, we want to see an expansion. We want to see a retracement or a pullback, and we want to see a reversal. The pips, you can use this crosshair, and then you can just click over there and hold all the way down. You see the number in the middle, 299, 3007. That's about 300 pips over there. All right. But again, if you're trading on Nasdaq and Dow Jones, every 100 points, it's about 100 pips. You decide so it's 100, 100, 100. All right. So wherever your RB number, as I said, it's 15, 200, 100,000, 900, 800, 700, 600, 500, and so forth. So again, Nasdaq, this is what we might be expecting, all right? Because the market has been moving up to the upside. There's a bit of exhaustion over there. So there is a possibility of a continuation to the upside, but we also want to see what the higher time frame is telling us. There is no indication of a straight reversal. There's still indecision. That's why the market is consolidating, but this is a possibility of what might happen, or we will break to the upside. And once we break to the upside, we want an expansion, then we want a retracement, then we want the reversal. Does that make sense? And then if you're taking your entry over there, you want 1, 2, 300 pips. That's where you can get your take profit. If you're taking your entry over here, 1, 2, 300 pips, that's what we're looking at. All right, looking at GBP AUD, we might come here and continue going up. This is what might happen on AUD, GBP AUD before we continue going to the upside. Remember, I said we need to take out liquidity. All right, with the reversal, we're gonna take out the liquidity. All right, we have trend line liquidity over there. All right, so the market, this is what the market might do, or unless if we do get a confirmation here, market coming over here, failing to break that price because it is quite a strong resistance area. So this is what the market might do. So we wait and see how the market is going to play out. If the market rejects this area, then we know we're taking our sell entries over there to the upside. The market gets here, we wanna you can take a high risk entry of a buy entry if the market rejects this price over here, and then we're going all the way up. You can target your take profit over there, but I would say let's wait for price to come to the to this area, and then we can take our sell entries over there. Right, so that's it. That's it from me. That's it from me today. Do you guys have any questions? Do you guys have any questions? Do you have any questions for me? So we're expecting that on GBP AUD, we're expecting that on US 30, we're expecting that on Dow Jones, on NES 100. Do you guys have any questions for me? Do you have any questions for me before we conclude today's session? All right, we've done that already. All right, as I said, at the end of the session, I'm going to give you guys, we have about 3 minutes before the session ends. It feels like it's only been 30 minutes, man. Yeah. Feels like it's only been 30 minutes. But I hope you guys learned quite a lot today. I hope you guys learned a lot. All right. Direction of UJ. Let's quickly go to USD JPY. For those of you again who attended last week's session, remember the market was around here, and I told you that we're gonna go into the upside on NES 100. I remember I was doing this analysis with you guys. We were around this price, and I said if we break that 14,400 price, we're gonna go to the upside. Let's quickly look at USD JPY. Let's quickly look at USD JPY. So what we want to do is we need to determine the overall trend. We are currently sitting on an uptrend. This is our high. We can use this as our current low. Cool. Let's just quickly zoom out, zoom in. So we are currently in an uptrend, right? Correct. Right. If you don't know how to, you can use that as your. You can see we are in an uptrend. So the market has been trending up. All right. Then we don't have a break of structure as yet. So what we want to see happening is we want to see the market breaking this price over there. All right. For a reversal, let's quickly check H1. If we don't have there's a bit of a double top over there, but it's not that valid. All right. Okay, let's look at the 1 hour chart. I think it will give us a more clear direction. So we had moved to the upside. We got to, let's quickly see what's our nearest key level over there, 650. So 650 will be our nearest key level, right? We had a reversal at our nearest key level. The market went all the way down, right? Created a series of Rama say you try, but please, I will be happy if you teach the beginners here to set support and resistance. The problem is you're not listening, Michael. I said our key levels are our support and resistance. That's our resistance area. That is the resistance area. Right, Michael? Please pay attention. That's our resistance area. I said we're using our key levels as our support and our resistance. I even made multiple examples. You can see over here, 795, that's 800. That's our support area over there. Do you understand it, Michael? We use price as our support. It's not just about drawing, it's about there, over there. Does it make sense? All right, so let's look at what we discussed today. We have a bit of a consolidation over there. All right. What did we have? We had an expansion to the side. I'll increase. We had an expansion to the downside. Michael, are you with me? That's how you place your support and resistance. We don't just draw on lines, we use price as our support and resistance. So we had our consolidation over here. All right. And based on what we've learned today, consolidation, there's an expansion. We now have our retracement, right? Which we also have our trend line liquidity over there, right? We want to look at the equilibrium. That is the midpoint of our consolidation. That is our key level again, 350. You see how everything is aligning? Do you see how everything is aligning? Right, the midpoint of our consolidation. Right, we had a break. Niyama. Just zoom in so you guys can see clearly. We had a consolidation over there. Right, we had an expansion to the downside. We are now having a retracement, so we're looking at price to come to this area over here. Nope. Looking for price to come to this area over there. Right, and that's where we'll be looking to take our sell entries. Right, that is where we'll be looking to take our sell entries. Are we together? For those of you that uses order blocks, here's an order block right at the midpoint, the equilibrium, the midpoints of our consolidation area, right? We have your order block over there, so we're expecting price to come to this point, to this area over here, and then we can do a sell off all the way to that price over there. Does that make sense? All right, you want to place your stop losses just above that price over there. That is, I'd say place your stop loss at 550, at 155.50. So you can place your stop loss and then you can place your take profits at 148,800. All right. Now stay tuned in the comment section. I mean, in the Telegram channel. Signals will be coming. So that is my expectation on USD JPY. That's my expectation in USD JPY. Any other question? Any other question? I believe that explain it. I believe that we understand what we just learned today. So we have our expansion. We have our retracements. Our retracement over there. And this is where we want our reversal to be. This is where we want our reversal to be. This is where our reversal area is going to be, and then we're going to go to the downside. All right. Someone says GBP USD. Let's quickly check on GBP USD what's going on. currently in an uptrend. We are actually in a consolidation area right now. As you can see, the market is just playing between these two prices over here. And let's check if we have a key level at this level. We have a proper key level. What's our nearest key level? 1, 2, 3, 6, 4, 5. Let's go 600. Let's see where we are. 600 is over there. See? And then let's see to the upside. We have 2450. That's our key level. 2450. Let me do 650 here as well, so we can work with the 50s. There we go. Bingo. Isn't that beautiful? Bingo. So we currently have that, right? So this will be our equilibrium over there. 2950. Perfect. See, it was perfect. Our 50% of the consolidation at 950. Perfect key. Perfect key level. All right. So what we want to see now is we want to see a breakout of this consolidation area, right? So as the market did there, consolidated over there. So I would say we have a chance of, we see that the market broke out of this consolidation area to the upside. We had an expansion, so we need to have a retracement, right? And either continuation to the upside. All right. So that's the scenario over there on GBP USD. You guys see that? Let's again see if this is by our key levels. What's our key level there? 400. Let's just do 250. 250. See, that's the high of the consolidation. And let's see over there. That's the low of the see how everything just works together when you, bro. Please don't despise this. All right, don't despise this. Don't despise this. All right. So we had a break out of this consolidation area there. The market shot all the way up. All right. So we had an expansion over here. We now have another consolidation here going on. We might have to come back to tap into this area and go all the way up. Or if the market then decides this is just a continuation, we can then break to the upside, and eventually market will go up, create an expansion, then go. So the market will create an expansion, market will create a retracement, and the market will shoot all the way up. Or, but I believe we have more chances of coming down to this area over there, either breaking this area and going all the way down, take out this point of interest over there, continue going down. So we'll see what the market does when it breaks out of this consolidation over there. So I'd say if you're looking for sell entries, you can either wait for this breakout over there, the market creates an expansion, comes back, shoots all the way down. So we have another scenario here of this happening, market not going all the way down there, coming back here of this consolidation. Depending if this consolidation will hold as a consolidation, then we go all the way down over there. All right. But as I said, I see the market coming all the way down. Right. I see the market coming all the way down. So this I won't look at. I'll probably look at these two scenarios over here. All right. Probably look at these two scenarios over here. So basically on GBP USD, I'm expecting selling opportunities. Okay, guys, we are already late. We should have finished about 10 minutes ago. Again, as I promised you guys that at the end of this session, I'm going to give you a promo code that you can use to double up your deposit. So the promo code is Isaac EDU, Isaac Edu. Take advantage of the promo code in 5 simple steps. Open the Octa trading app or visit the Octa official website. Go to your profile, find the promo code section in the menu, enter the promo code and press activate, make a deposit, and enjoy your bonus. That's it from me, guys. I really had fun with you guys today. Although you guys were not communicating too much with me, I hope next time when I see you next time, you guys will communicate. You're communicating towards the end, which is okay. But thank you for participating on behalf of myself and on behalf of Octa. Thank you guys for joining us. I will see you guys next week, Monday, 7 p.m. South African time or Central African time, 7 p.m. next week. Again, remember to join our Telegram channel. Remember to join our Telegram channel. The link is in the comment section. Please make sure that you join the Telegram channel. And signals, free educational content, things will be sent in that Telegram group. So that's it from me, guys. You guys have a blessed evening. Have a great evening. I love you. It's all love from me. And remember, Jesus loves you. And I wish you guys all the best for this upcoming week.